Welcome to Beginner's Course Remastered, Lesson 5, Targets. Targets are areas on our chart where we target something to sell or purchase. Much like levels that we mark on our chart where we look at levels of support and resistance, targets are the actual decision to make those buys. You have levels on your chart, and sometimes you can have 3 or 4 different levels of support, and one of those levels will be your target. Same with levels of resistance. Sometimes when you're looking to sell a stock, you'll have 4, maybe 3, or even 2 levels of resistance on your chart, and you pick one of those to be your target. So levels and targets are similar in the fact that they both share the same exact area on the chart, except the target is where you actually sell your stock as opposed to where the levels are where you mark where your stock could possibly go. One of the key factors to targets is that they constantly help you reduce risks in trade. By always having a target in mind as to where a stock can go, you are going to be constantly reducing risk instead of making last-minute decisions. If you have a buy target or a sell target pre-planned, based on the levels that you pick, you can easily maneuver through your different levels and pick spots where your target makes sense. Now, what I mean by that is, say you have 2 or maybe even 3 levels of resistance. You have marked out 3 areas that all could potentially be targets, but you haven't quite made up your mind yet. Well, maybe you want to see how your first level gets reacted to prior to picking if it's going to be your target. Sometimes you'll see a stock hit your first level, kind of linger around that first level, and then blast right up to the second level. And then maybe at that point, you're prepared because you had your levels marked out and you know that each one of them can be a target. Now, maybe it completely ignores your first level, your second level, and goes straight to the top for your third level. Well, this is just good preparation when you're talking about targets, because when you have these levels marked out on your chart, you're able to pick the target that makes the most sense given the trade. Now, if we kind of flip that around instead of resistance this time and talk about support, the same rules apply as where you could have multiple levels marked on the bottom of your chart, but you're not quite sure which one should be your target yet. Well, as the trade evolves, that's the beautiful thing about targets. It allows you to pick the level that you want to either buy support or sell resistance in the moment and be well prepared, so you're not kind of making haphazard decisions or speeding through and simply just making mistakes because you aren't prepared. Now, the next thing you're going to ask me is, Cotton, what makes these targets? Well, to make it easy on you, it is just the levels that you marked on support and resistance. The target is just the one that you pick that you end up selling the stock on. We're going to jump right into an example and talk about targets. Now, the best part about targets is that they are constantly reducing risk. Let's think back to the last video where we talked about moving a level down lower and lower and lower. We used a $2 example that when it's approaching $2, you might want to move your buy down to $1. When it's approaching $1, you may want to go to 50 cents. And we kind of use this descaling factor to say, okay, let's reduce our risk by buying a lower target. Well, indeed, that's what we did. We used a level that was lower than what we were using for marking our levels of support as our buy target. Now, the great thing about this is by constantly adjusting your target buy areas or your target sell areas, you are constantly taking less risk in trades and exposing yourself to more profits on the other side. So this is a very cool and interesting way that we can use targets. Now, here's a great tip that I want to share. What I see all the time, and traders kind of get this commonly mistaken, is they will have that target at $2. Say a stock drops down to $2.10. They will keep their target at $2. Well, this is kind of an area that you should have the alarm bells going off in your head. You almost reached your target, but you didn't quite make it. Typically, what I see happening here with day traders is they haven't seen the right level on their chart, and actually at $2.10, well, that simply was the level that was meant to be hit, and the next level is their $1 level that they have marked. So if you find yourself getting super close to your targets on a regular basis, this is when you're going to want to take that level that was your original target and adjust it down to the next one. This is how you take your targets and reduce risk. Now, this isn't always going to be the case. Sometimes a stock will hit that $2.10 mark, and then it will drop down to $2 and hold that level, and you might miss your target. However, for the most part, when a price gets that close to a stock, the target was already hit and you simply just missed your level, or it was front run a little bit and it just kind of floated slightly above the price. If you're using this technique of applying your targets on your charts to the levels as it moves towards them and moving them down and applying them to different targets, you are going to find that you might miss some trades. And again, that's okay. We already talked about this in a previous video. This is more about understanding where you should use your targets and having multiple levels marked on your chart on the bottom side and on the top and saying, okay, this is my target. So again, if you were to have this $2 to $8 area, maybe your first target was $2, but you dropped to $2.10. Well, you missed your target, you didn't get filled. Move your target on support down to a different level, something that's lower, something that when that level gets hit again, it allows for the failure of the level and to simply go after the next level. It's kind of the same thing with the top of your chart. If you have $8 as your target, and maybe it only goes up to, let's say, $7.20 and then falls down, you're likely going to go back up to your target at $8. Now, if you get too close to your target at $8, maybe you got to $7.90 or $7.80. Well, I think it would be wise to just sell at maybe $7.70 or 60 cents or 50 cents, or even down at $7 if you have to. This simply could be what we just talked about, maybe a target at $2.10 goes down and it doesn't quite reach your $2 target, then it goes up and falls through the level down at $1. This is the same thing. Your target at $8 might actually have already been hit, but maybe you mismarked the level at $7.90 and it didn't quite reach there. And you're going to miss your opportunity to sell your target in distribution, and it may or may not go back up to your next target. So just be mindful of targets, that you need to apply them in different ways. And we call this applying targets across your charts. So that's it for targets. We're now building our tool set in day trading out. Our repertoire of usable actions is increasing. We have levels, we have trends, and now we're able to add targets to it. In the next lesson, we're going to talk about timeframes, but just a quick tip for you before we go. Don't forget that your levels are targets, but your trends are also targets too, since they're levels.